to your Financial Legacy podcast. I am your host, Maria Ellis. On every episode, I will bring you my perspective and the perspective of my guest on financial planning and financial legacy topics. Here on the Financial Legacy podcast, we're changing lives one person at a time by helping you create your own financial plan and financial legacy. To help you create and enjoy your financial success, connect with us at financiallegacy.life for your complimentary consultation. So in last week's episode, I shared with you a sample of a family business legacy plan. Based on that, some of you have sent me correspondence and emails and phone calls, and you're asking, you're basically telling me that you are facing some obstacles and when creating and actually even implementing your family plan. So what I'm going to do today is I'm going to share with you some proven ways to be able to overcome some of the obstacles that often business owners have to face. Just please remember that every legacy plan is different based on your own business, your family requirements, and your values, right? So just keep that in mind. So to start this morning, I would like to start with a basic question, a single question that I have for you as the business owner. What will it cost you and your family if you delay and you do not create and implement a family business legacy plan? What will it cost you, right? So many of us don't think about the actual cost and we tend to procrastinate, but creating and implementing a successful family legacy plan, I know it's not easy, right? So I know it's loaded with emotions, and you want to make sure that the plan is fair, that it's equitable, and you're in a position to be able to distribute your business and your family assets in a way that you feel is equitable for everybody involved. I understand that. I also know that it is very important for you to start the process, and in my previous podcast, I've always suggested that you take your time and you work with your advisors and family members, and that will help you with ideas and help you implement a plan that is strategic and to be able to, one of the main concerns, of course, is to be able to minimize the amount of taxes that you have to pay, that you legally have to pay, right? So, while I was doing research for my book on, creating a family plan, I realized that about 40% of business owners that I've interviewed for this book actually did not have a plan because, they have many excuses. But one of the excuses that I'm often hear is that, oh my God, it's such a timely, complicated, time-consuming process, right? So, that's always a immediate response that I get. So some of the other responses that some of the business owners share with me is like, hey, Maria, it's too early to start a succession plan. Well, I'm here to tell you, it is never too early to start a succession plan. So I highly recommend that you start the conversation, especially if you're concerned about paying too much money in taxes, and then be able to, have extra funds if you plan properly, to be able to have extra funds for your family, for any mission-based charities that you like to donate funds to, right? So it is important. You will also enjoy the comfort of knowing that your loved ones will be taken care of, right? So especially if in your life you may have family that may have disabilities, it's very important to make sure that you create a plan that is able to take care of their needs. The succession plan requires that the business owner to create a new vision for the company, because you need to transfer, in a fair and equitable way to all the parties involved, including not only family members, but also outside talent that, are passionate about making your business grow, right? So yes, again, I repeat, it is never too early to plan for succession. Remember, More time equals more options, such as implementing tax strategies that give you and your successor and your business better cash flow, right? Cash flow, as you know, is the blood of the business, right? Is crucial. So having more time also gives the business owner, you as the business owner, the opportunity to teach and to train, successors, and to be able to provide inside information about the business to people that are going to help bring the business to the next level. It is a fact that business owners are often overwhelmed about succession planning, but you don't need to know all the answers to your questions, right now. If you start developing a team of people, you hire advisors to help you with the planning process, you could start by looking around you and start recognizing the incredible opportunity and identify those family members whose dream is to continue the business legacy, for instance. All right. So also, some business owners are concerned that they cannot find adequate advice in valuing their business, that they are trying to decide, what is the value of the business. They do not know where to start and how to value the business if you're trying, for instance, to determine the value of your business. So you start by determining the value of your business based on earnings, book value as an example. How much money are you actually have invested in the company? Is that relevant? Is the company making money? Is the company profitable? What are the obligations of the company? So you can value your business based also on multiples of revenue. For instance, earnings before interest and taxes and depreciation is often, a good advice. And there are many other factors that are influencing it, but as far as numbers are concerned, my preferred method of valuing a business is really earnings before interest, taxes, depreciation, and amortization, something that in the business world is called as EBITDA. All right, so that's my advice on valuing the business. So often when you value the business, you value that based on you can value it on a business on a income approach, on the cost approach, or the market or comparable sales approach, depending on the industry and how best suit the particular method that you want to use for your specific business. So in my experience as a family, business advisor, the major obstacle for creating and implementing a family legacy plan is business owners believe, again, that the process is too complex. So with family businesses, succession planning is even more complicated because the family members' relationships and really high emotions involved, and because many people do not feel comfortable also talking about, you're getting older, maybe you're getting sick, we're a little closer to, your time horizon on planet Earth. And certainly financial matters. Many people do not like to disclose financial information. So again, that's another reason why people tend to postpone creating a plan. So, well, for instance, also something to keep in mind is that if you are transferring the business, it's important to realize that the management and ownership, the management of the business and the ownership of the business do not have to be the same, right? So based on the skill set and the knowledge and the maturity of your children, you may or may not decide to transfer management of your business to just one child, as an example. But you could transfer equal shares of ownership to your children, whether they are actively involved in operating the business or not. That's, again, a very personal decision that you need to make, right? So, however, it is critically important to consult with your business advisors, including your accountant, your tax advisor, your attorney, and family members to obtain advice about strategies to minimize taxes and to create and implement a family plan that is fair, that is equitable to all stakeholders, including, by the way, the Internal Revenue Service, right, the IRS. Because as you know, there are going to be state taxes that you're going to have to pay based on the overall value of your assets at some point. So also in terms of obstacles, some business owners simply believe that they do not, that they do not think about leaving the company yet. It's like, I'm still young, I'm still can do it, So some business owners believe that they are years away from stepping away from the business, and therefore they do not need to worry about succession plan. I mean, that's, their thinking. Some others, like I recently had a client that he really, had this immortality syndrome. He did not want to deal with his own immortality, right? So some executives, it's simply a matter of avoidance. It's like it's too complex you're too busy right now. There are other priorities, and they just simply keep postponing, kicking the can down the road, so to speak. They are not ready yet to give up the position of the company and cannot contemplate even being replaced. That's also, another way, another reason why people keep on postponing creating a plan. So also, some business owners do not think about retirement. They do not want to retire because, they may have conflicts with family members or even with employees. So they keep on working and they keep postponing making that decision. Of the business owners who expect to retire or semi-retire within 5 years, I found out that 45% have really not yet chosen a successor. So, I mean, that is kind of important statistics to keep in mind. I hope that you are not a part of that particular statistics. All the business owners who are closer to retirement and are not better at planning. Some of the business owners, let's say my experience, in about 60 to 65, who are expected to retire within 3 years, 50% have not yet chosen a successor, and who do not, they often try to clone themselves. I mean, cloning themselves is a typical issue for entrepreneurs who have sort of had the baby for many years and had seen that baby grow, and so they think that cloning themselves is a way to do it. So choosing a successor is not about cloning yourself. It's about finding someone to build upon what you already have and to take the business to the next level, right? So most qualified successors may turn out to be someone whose leadership style, skills, and business strategy are quite different from yours. I mean, so keep that in mind. The important thing is that provided that the two of you share the same fundamental values and vision for the company, you must not let the fact that they approach things in a different way than you cloud your judgment, right? So we're all different. We all have different set of skills. The question is, is this particular person the right person to move the company forward, right? So there's no need to try to clone yourself. So one last consideration is that one of the major obstacles to create and implement a family business legacy plan is really the lack of knowledge about state taxes. The state tax is a huge tax on your right to transfer property at your death, right? We all at some point have to leave planet Earth, and um, so state taxes is there. You're going to have to pay sooner or later. So how is, how are, what's the valuation? How will state taxes be determined, right? So the way that they are determined is that it consists of accounting of everything you own and have certain interests at the date of your death, of passing on. So the fair market value of these items is used. Listen, it is the fair market value, not at the value that you actually pay for. So the government likes to, value your assets based on the fair market value at the time of your passing. So the total of your estates, all these items are considered to be your gross estate, right? So they include your cash, your securities, real estate, insurance, any trust that you may have, any annuities, any business interests, and any other assets that you have. So often high net worth individuals and business owners are concerned about the cost of state taxes because it is a a real consideration, an important one that is going to affect the overall cash flow of your business in terms of how much money will be left available for your family and for organizations that you may want to contribute that are in alignment with your value, right? Nonprofit organizations. So according to the current Internal Revenue Service guidelines, estates of descendant residents, citizens of the United States, the simple estates including cash, public traded securities, they are basically, all those assets are combined, and you have to pay taxes. A filing is required for a state with combined gross assets exceeding 11,580,000 in 2020 and 11,700,000 in 2021, according to the United States Internal Revenue Service. For states or descendants that are non-residents, non-citizens of the United States, the state tax is a tax on the transfer of U.S. located property, which may include both tangible as well as intangible owned properties at the descendant's date of death, right? So the computation of the tax requires that you have a total value of these assets that are located in the United States, and generally also they require a separate statement of the total assets that they own outside the United States. So the IRS can impose federal lien, on your property, which is the government's legal claim against your property when you neglect or you fail to pay, your state tax debt. So this is a serious matter. The lien protects the government's interest in all your property, including real estate, personal property, and financial assets. The IRS may also publish a document that is called the Notice of Federal Tax Lien to alert creditors that the government has legal right on your property. So again, this is a serious matter. I know that planning is challenging, but I think that you should be moving from your, to-do list from that someday we'll do it to let's do it now, right? We need to create that urgency because it is important. It is important for your well-being, for your financial well-being, for your peace of mind, to be able to create something that is meaningful to you and that is equitable for all parties involved. It's fair and equitable for all parties involved. So at this point, I would like to summarize by saying thank you for tuning into the Financial Legacy Live podcast. Here with me, Maria Ellis. To learn more about how to work with me, go to financiallegacy.live. Here on the Financial Legacy podcast, we are changing lives one person at a time to help you create and enjoy your financial success. Connect with us at financiallegacy.live for your complimentary consultation. Thank you again. Have a great day. Be well.
In providing answers, neither Maria Ellis nor the Financial Legacy podcast and guest speakers are acting as certified financial planners, advisors, certified financial analysts, CPAs, economists, accountants, or lawyers. Neither Maria Ellis or the Financial Legacy podcast and guest speakers make any recommendations as to any specific securities or investments. All content is for informational and general purposes only and does not constitute as financial or legal advice. You should consult your own tax, legal, and financial advisors regarding your particular situation. Neither Maria Ellis nor Financial Legacy podcast and guest speakers accept any responsibility for any loss that may arise from accessing or reliance from any information in this podcast. And to the extent permitted by law, we exclude all liabilities for any loss or damages derived directly or indirectly arising from the use of the information.